Good evening, members. I welcome you all in this today webinar on tax audit practice session, today is the first day of our this session. We will continue this on every Friday from evening 6 p.m. to 8 p.m. and up to 30th September. So I welcome you all, and I welcome CA Chandrasekhar Chitleji, the Vice Chairman of Taqrb and last year my Chairman Direct Tax Committee. Welcome Chitle sir. We are also very honored to have with us CA Dr. Girish Ahuja ji, Guru of Direct Taxation. So I welcome Girish sir.
Good evening to everyone. Good evening, please.
Good evening, sir. Now, besides direct taxation, Ahuja ji is also Guru of Yoga.
He is inaugurating our program. So I welcome all of you in this very important webinar from the series of tax audit practice session, tax audit program. Today, we are going to discuss what is necessary during course of tax audit and why there is a need for proper adjudicating tax audit program before conducting any assignment of tax audit. As all of you know, that tax audit is an important area of practice for the chartered accountants. With the introduction of Provision for AB in the year 1984, it cast onerous responsibility on chartered accountants. That is why it became more necessary that an assignment of tax audit be executed with proper planning and with having a defined tax audit program. I would assume that today's webinar will going to be a value addition for all of us. I would like to extend my warm welcome to CA Dr. Girish Ahuja ji, C. Chandrasekhar Chitleji ji for joining and sparing their valuable time and guiding. And I also welcome our today speaker CA Sachin Jain ji and my council colleague CA Abhi Sajar ji for taking this session. So over to Chitle sir.
Thank you, Chairman sir. This particular series, tax audit on Friday. So please book all your Fridays for the purpose of discussion on tax audit. We will be discussing various clauses, intricacies and reporting requirements along with documentation requirements as well. If you have any queries on tax audit, you may please send them. Our host will announce the email ID of Tax Audit Quality Review Board so that we can address those queries during the practice session. I also see our council colleague from Southern India, CA Prasanna Kumar D also is present. So I welcome Prasanna Kumar, I welcome Abhay Chajar ji, and of course,
thank you.
Indeed a great privilege and pleasure that when we are inaugurating this particular session on tax audit, our tax guru CA Dr. Girish Ahuja is present. So over to you, Chairman sir. After all of them talk, then maybe I'll talk for a while. Over to you, Chairman sir. Rajbhai, can you invite Dr. Ahuja to?
Yes, sir. Yes, sir.
Yeah, please.
So thank you, Chitle sir. Now I request our tax guru, CA Dr. Girish Ahuja ji, to please grace this our series. Ahuja sir.
And inaugurate the session. Yeah.
Sir, don't give me that privilege of doing something, Good evening to everyone. Let me tell you, sir, this 3CA, 3CB and 3CD is a very, very important document, When we are preparing this report under 3CD, it's really very important. Although I have not done audit for the last 40 years, so I am not aware of so many things. But I do know, I know, remember, when we were doing this 3CD at one particular time, what is this? The 50% of income tax is there on this 3CD. More than 50% of the income tax. But what I'm finding it difficult is that most of the people writing not applicable. There may be a case where it may not be applicable, but don't write everywhere not applicable, not applicable, not applicable, because whatever you're writing in 3CD, you are giving everything on a platter to the income tax department. Everything on a platter to the income tax department. They criticize us a lot that this is not happening, this is not happening. But we are helping them to provide complete information about the tax audit. In that 3CD form, complete information, whether it relates to receiving money or 269 SS, 269 ST or TDS, or even deposit of the PF, PSI, everything we are giving them on platter. And still they are criticizing us. Let me tell you, sir, it is a very important piece of report. 3CD is very important and is being signed by us. All the people say this is not signed by us. It is signed by the SSC. We are only filling it up, but you should take a signature of the SSC that this is correct. We are responsible for filling up 3CD, but at the same time, the ultimate responsibility of the SSC, because the information has been provided by him to us many times, and we do not take the signature of the SSC, but we do put our own signature there. According to me, you should take the signature of the SSC also on that 3CD, and then it becomes a document where you can also pay. If you have committed a mistake, at times you can say this was the management communication to us, and on the basis of that management communication, so many times we have given that report. But let me tell you, 3CD is a very, very important piece of report. You are giving the complete details of all those items which are there. But at times I've seen, I remember those times, 28.4, value of any benefit or purpose whether received during whether convertible into money or not. But now that document has become important, you know that because of 194R, TDS problem and other thing, otherwise 90% people were not showing value of benefit or purpose because why we were saying we were not provided with that information. How do we know that benefit or perquisite was given to that person and he has not shown as an income? But the government is also becoming serious. Everywhere they have put some TDS thing, TCS thing, and you have to report on that, whether that benefit or perquisite which was given and 194 is given, that whether they have shown it as an income or they have deducted TDS under 194R also when they are providing that benefit or perquisite to the client. So my point is, sir, very, very great responsibility with very little remuneration given to us in the case of Form 3CD. Very great responsibility, but remuneration is not that much. So therefore, be careful while filling Form 3CD. It becomes a responsibility of a chartered accountant as well, although the ultimate responsibility of the client, a chartered accountant as well, and we have to upload that. And you know all that now. What is the new changes? I am not aware of those new changes. I know the law, I know sections, I know clauses and all that, but I do not know many clauses of Form 3CD because I have not been filling up those form. Unless you do practical thing, unless you do yourself, you are not able to understand the implication of that. But there are so many important items there in Form 3CD. In recently also, they have added many more items. Am I right? They have added many more items to that. And it is becoming a difficult job day by day. And people are saying 90% of the 3CD are not correct. Please be careful. Please be careful. It is our responsibility. Whatever maximum we can give, we should give to the best of our knowledge and best of our belief. Otherwise, it is also a responsibility. It is a big job. Gone are the days when they used to put stamps on it and sign it. It is becoming more difficult for you to fill up Form 3CD. I've seen people are not giving information in those Form 3CD, and it is becoming different. Sir, little knowledge is a dangerous thing. I have a little knowledge of items of 3CD these days because I have not filled up myself, although I know what are the items they are in. But how practical difficulty you face, you can only tell. Or the speaker sitting in front of me who has to take the session today will only be able to tell, sir, I have given the macro view of that, but micro thing in that Form 3CD is really very difficult. I know that he's going to take item one by one. Am I right, sir? Jain sir? You are going to take the item one by one and discuss each and every item But let me tell you, sir, I welcome Abhay Chajarji also. He's on the line. So those are welcome, sir.
Thank you so much.
Member
Thank you,
for
sir.
Bhopal. Thank you. He's also there. So, my dear sir, please read the law before you fill up Form 3CD. Each and every item is related to income tax. Unless you know the law relating to that, read that particular section when you are providing information there. 269 SS, 269 ST, 269, all items are important. TDS, ESI, Provident Fund, even 1 day delay, you have to report. Gone are the days when there were grace. There is no grace now. You have to deposit by 15th. Am I right, sir? Jen sir? 15th of next month. You can't say that 5 days grace is here. Earlier, there used to be a grace in Provident Fund. Now there is no grace in Provident Fund. ESI 21st, and this is 15th of next month. So be careful. It is a very important task. Don't take it lightly. God bless you. Thank you very much, sir. Thank you.
Thank you, Dr. Ahuja, sir. It was a befitting inauguration by CA Dr. Girish Ahuja. And 3 takeaways, as I can see from Ahuja sir's lecture, is one should take representation letter so that the onus goes on the assessee rather than on the chartered accountant. Secondly, he said that reasonable fees should be charged. So maybe let us all resolve that whatever fee we have charged this last year, maybe 25% more we have to charge to do justice to the complications of law. And also the care and caution that has to be observed while discharging the responsibility as a tax auditor. And this tax audit quality review board is getting tax audit reports, and we are finding certain errors where at times we are compelled to refer those matters to the disciplinary committee. So the intention of this particular series on Friday on tax audit, as envisaged by our chairman, CA Dr. Raj Chawla, is to reduce the burden of tax audit quality review board, and more or more report we get where we don't find any error. So we believe that after we conclude the series, hereafter the tax audit quality review board will have lesser work. Thank you.
Thank you, Chitle sir. Now I welcome and request CA Abhay Chajad, our Honorable Central Council member from Bhopal, young and dynamic leader of our profession, to please give his word of wisdom.
Yeah, and Abhay Chajad sir had been vice chairman of TAQRB last year, and he has done very wonderful job, so that no pendency was left for this year. So we really are happy with the work of Abhay Chajad ji, and we know that he can share his wisdom to the members.
Thank you very much, Chitle sir, and of course my Central Council colleague, the chairman of very important board, the Taxation Audits Quality Review Board, CA Dr. Raj Chawla, Vice Chairman Chandrasekhar Chitle ji, and we just heard the tax guru who was there and sharing his experience, CA Dr. Girish Ahuja, and of course the speaker today is Sachin Jain ji, sir. Thank you so much for being here, and thanks to the committee that had a opportunity to interact with Chawla ji and Chitle ji, and also my Central Council colleague, the chairman of the Professional Development Committee, Prasanna Kumar, I can see. Thank you very much, sir. And thanks to the TAQRB for inviting me and giving me this opportunity. And like Chitle sir said, that was an opportunity for me to be the vice chairman of this very important board. And we did our best with the support of course, Rajji and Chitle ji. And of course, now they've been given responsibility. So the baton is now shifted to them. And I'm sure this year also a lot of work has already been done and has been in process of doing it. I think very important thing which we did in our committee is to release a material, which was a study on compliance of non-compliance of tax audit related matters. Like Chitle ji was mentioning, that a lot of reports were covered, a lot of advisories been issued. There were less, non-compliances where there were no major non-compliances, or there were only minor non-compliances, which were cases were only advised to the auditors or was reported in the form of a material, which we had released last year. And I think because there were certain changes, there were certain clauses where, more important, the issue of reporting, more particularly 16B, there was one clause I remember there were a lot of reporting issues, a lot of notices which the members had to respond. And 44, of course, which was newly added, was also how was to be reported and how it has to be covered in the form 3CB or 3CA, and how it has to be reported in the clause was a big challenge for each auditor to report. But thanks to Chitleji, because being chairman of the direct tax committee last year, I think it was after 8 years, the guidance note on tax audit was released by the ICI, where every clause was covered and elaborated and was explained in a way that when the auditors is actually checking the clause which is being prepared by the assessee, completed by the assessee, and is to comment as on 3CD and report under 3C and 3CB. I think this guidance note was very useful. And I believe Tax Audit Quality Review Board ensures that guidance note of ICI, the Income Tax Act, which is there, and the indirect tax laws which are there, and there are changes, notifications, circulars, time and again, is all being complied with by the auditors. And of course, my experience more particularly was with respect to the reporting in 3CA and 3CB, where I could share my experience that SA 700 is the format where we issue the audit report under the Companies Act. And SA 700 formats have been followed also in 3CA and 3CB, where you'll have to report your observations under the clause 3 of 3CA and clause 5 of 3CB. It is very important for an auditor to ensure that what is the responsibility of the management, what is the responsibility of the auditor should be clearly specified in the observation in form 3CA and 3CB. I think this is very important because there are cases where the observations have not been reported, and through the TAKRB, the advice have been issued to the auditors that why this was not reported and there was a non-compliance. So I think the auditors must ensure that 3CA, 3CB, which is our responsibility, every observation should be part of the audit report and should not be as an annexure, should be reported under 3CD. No general observation should be reported. It should be very specific, whether you are reporting under TDS, like Dr. Girish Ahuja ji was mentioning, whether you're reporting under 269SS, under ST, TT, or 48.3, where there is a certificate which is obtained by the auditor through the assessee. All those should be properly reported and ensured by an auditor that the observations clearly mentioned. I think this is so important. An SA 700 format is thoroughly picked up and reported. This is one important point I thought I would share with my experience, whether it is 3C or 3CB. As an auditor, please ensure that every observation is covered in the audit report under clause 3 of 3C and clause 5 under 3CB. Rest, I'm sure we'll have the experience of Sachin Jainji, who will be sharing, the entire the importance of the tax audit and the clauses, how it has to be reported. And of course, the good work being done by Dr. C. Raj Chawla ji and Chitle ji under this board. I think, again, a lot of reports being picked up. And more importantly, please ensure that from the ICI, we are playing a very important and a regulatory role. So quality is utmost priority. Issuing of guidance note, compliance of Income Tax Act, compliance of indirect tax laws, any other compliances are a requirement as an auditor for us to perform the work with quality. So with these words, I thank you once again, the TAQRB board, for inviting me and giving me this opportunity. And I'm sure with this Friday series, which this has been an initiative of this board, would really help the members to perform the work of tax audit qualitatively. Thank you so much, Chitleji and Chawlaji, for this opportunity.
Thank you, Abhay Bhai, for your word of wisdom and your experience. So now I request CA Prasanna Kumar D to give his word of wisdom. Prasanna sir.
CA Dr. Raj Chawla, the chairman of TAQRB, and CACB Chitle, the vice chairman, and Abhay Chaujay, the previous chairman, and who is well connected with the direct taxes, and tax guru, who is sitting in the same room from where I am addressing you, the CA Dr. Girish Ahuja ji, and all the participants. Good evening to all of you. I don't have much to add except only one thing. which I remember, whenever I attend any program on a tax audit, many seminars I attended, people used to say only one thing: it's not true and fair, it's true and correct. What you report there has to be correct. Nothing more, nothing less. Everything needs to be reported. That's one thing we should remember here. Second thing, when a case which has been subject to audit, tax audit, is selected for scrutiny by the income tax department, because after all, we are giving this report to income tax department, all the clauses which are covered in Form 3CD, that should not result in any addition whatsoever, except interpretational issues. There should not be any addition at all. That is what is expected by the Government of India. That's why this clause has come. These are things what I've learned from the earlier speakers. I'm just only telling you. Wish you all the best. The Fridays is a great series, and refreshing the entire thing. At least one person in one form should attend this entire series, so their knowledge levels will be to the optimum level, and they refresh whatever that need to be done. And the speakers will be sharing their latest experience, also practical experiences. Thereby, we will perform a great audit, tax audit, and do the needful as required by the law. Thank you very much. Wish you all the best.
Thank you, Prasanna sir. Now I request my chairman, C.A. Chandrasekhar Chitleji, to please lead this series of webinar. Chitle sir. Chitle sir, are you there? So now I request C.A. Sachin Jainji from Delhi to please start this series.
A very good evening to my dear friend and Central Council member, C.A. Dr. Raj Chawla ji, C.A. Chitle sir, Vice Chairman of the TAQRB, my co-speaker Abhay ji, and Guru, Tax Guru, Dr. C.A. Girish Ahuja ji, and Mr. Prasanna also. I am very thankful to the TAQRB for giving me an opportunity to share the dais with C.A. Dr. Girish Ahuja ji today. And I will always remember this day because due to my Guru, C.A. Dr. C.A. Rajkumar Gupta ji, under whom I started my CA, I am sitting now with Guru of the Gurus. So I congratulate Dr. Raj Chawla ji and Chitle sir for starting this a very good step webinar on tax audit series. Earlier we used to listen that every Friday a movie is released, but now we see that every Friday you will get a new webinar on tax audit series. So you will get an experience of new speakers every Friday on this tax audit web series. So just book every Friday in your diary till 30th September. So I congratulate CA Dr. Raj Chawla ji and Chitle sir for starting this webinar. Now, we all know that season of tax audit started again, and we have to sharpen our knowledge and skills for tax audit. Now, gone are those days when we conduct the tax audit with closed eyes. As Dr. Girish Ahuja sir says that we have to be very careful. We have casted a very great responsibility by the department, and due to that, we have to be very careful while doing the tax audit. And as also we know that we are fighting with the machines now. We are fighting with the artificial intelligence tools. So we have to prepare our tax audit program very carefully. We have to allot the work to our article assistants very carefully, and we have to do everything in a very cautious manner that penalty under section 271J, as we all know, is there. So we have to be very careful. So today I have been entrusted with general discussion today because this is the first day, and I will not discuss clause by clause discussion on 3CD, form 3CD. I will discuss only the formalities, the provisions of tax audit today. And I welcome all the queries raised by the members. So precautions while tax audit. Precautions while tax audit is, first of all, we have to maintain the tax audit register as prescribed by the ICAI. Because this register will help us to count the number of tax audits, to see the tax audit reports prepared by us. So we have to prepare the tax audit register as prescribed by the ICAI, first of all. Then number of tax audits, we have to be very careful. 60 tax audits we can do. Then documentation, working papers. Documentation, as we all know, is very serious issue. So we have to prepare the documentations and working papers in our file, tax audit file. Then UDIN. UDIN, we have to generate the UDIN for tax audit separately. There has to be two UDINs. First is in case of company, first is in the case of tax audit, and then is corporate audit. So we have to maintain UDIN also. Then digital signatures. We have to be very careful while keeping the digital signatures of our clients, because Information Technology Act is there. We have to be very careful. Then management representation letter. We have to obtain the management representation letter from the client, because nowadays, as we all know, that peer review board has started the second phase with effect from 1st July 2023. And in that phase, we have to be covered the partnership concerns, the partnership firms having more than 5 partners will not be able to do any attestation function with effect from 1st July 23. So we should maintain the documents properly. And due to this peer review, which is effective from 1st July 23 on the firms having 5 or more partners, we should maintain the documents properly. Then guidance note, as Mr. Abhay Chajad has also said, that guidance note was prepared by the Direct Tax Committee in the last year, and it was prepared with very great efforts by the ICAI and the Direct Tax Committee. And we have to consult that guidance note while having any problem. Then I also want to say something about TAQRB. TAQRB is Tax Audit Quality Review Board, and this board has started a very good initiative. And Tax Audit Quality Review Board has selected some of the tax audit reports, and in that tax audit reports there are very common mistakes. These common mistakes are that blank, and on most of the cases, some of the clauses are mentioned as blank, or nil is not there, written there, not applicable is not written there. So we have to be very careful. What we are doing is that we are relying on the softwares. So when we are relying on the softwares, so we are not looking after the final outcome. While preparing the tax audit report from the softwares, on some places, the blank reporting is there. When this blank reporting is there, so that blank reporting will hinder us. So please don't rely on the software with closed eyes, and just check your tax audit report after preparing the tax audit report. And please mention the nil, not applicable, wherever it is applicable properly. Then SA 700 para on the what you said is that tax auditors and management's responsibility. This para must have to be mentioned. This para must have to be mentioned in the form number 3CA and 3CB properly, as suggested by the guidance note issued by the ICA. Then cross-reference with ITR. Cross-reference of some of the clauses with the ITR must be taken care of while preparing the tax audit report. Cross-reference with two clauses of the tax audit report interchangeably also to be taken care of while preparing the tax audit report. Then physical report signed, as also told by Dr. Girish Ahuja ji, that physical report must be obtained and that has to be signed by the assessee also. We are signing the tax audit report, and it is, as we all know, as per the guidance note also, that tax audit report is the baby of the assessee, and we are signing the same. So it is the responsibility of the assessee, but on the second aspect also, that it is also the responsibility of the chartered accountant. So we have to prepare the tax audit report in physical format and just take the signature of the assessee on that report and kept it in your documentation file along with your signatures. So this must be taken care of while doing the tax audit. Then certification. Certification is there as form number 3CD, as we all know that form 3CD is to be mentioned as true and correct. When it is a true and correct report, so we have to be very careful. So true and correct means that we can't rely on the management representation with closed eyes. We have to be very careful on each and every clause while certifying the information maintained in that clause. So this is true and correct report. We cannot do on sample basis. In large cases, in large tax audit reports, we cannot do on sample basis. Whatever information is there in the tax audit report, we have to verify the same. This is one of the aspects of the tax audit also. Then tax audit revision. Last year and in many years, I have seen that many of the members, when find some mistake in tax audit report, they just revise the tax audit report. But as per Rule 6G3, there is no provision for revision of tax audit report, and the tax audit report can only be revised in two cases only. First is in case of 48(3) payments made after the tax audit report, and second is in case of 40A and 40AIA payments. So this is to be kept in mind while revising the tax audit report. Only two cases, in only two instances, you can revise the tax audit report, and in other cases, you cannot revise the tax audit report. So please keep in mind while revising the tax audit report as per Rule 6G3 of the income tax rules. Then, now, who is required to get the accounts audited? As per Section 44AB, there are 5 instances when an assessee has to do the tax audit, has to conduct the tax audit. First one is when a person is carrying on business if his total sales, turnover, or gross receipts from business exceeds 1 crore. So this clause says that when a person is having a business receipts or gross turnover or gross receipts from business exceeding 1 crore, and this is to be kept in mind that only business receipts is there. It is only from business. Then he has to get his accounts audited. But there is a proviso. What that proviso says that if aggregate of all amounts received from, including amount received for sales, turnover, or gross receipts from business in cash, does not exceed 5% of the said amount, and in case of payments for expenditure, the same amount does not exceed 5%, then in place of 1 crore, an amount of 10 crore is replaced. So when your turnover is from 1 crore to 10 crore and you are not having any receipts exceeding 5%, in cash and any payment for expenditure in cash more than 5%, then you do not have to get your accounts audited under section 44AB. This is the proviso to first one clause. And this is to be kept in mind that this is a mandatory clause. This is not your choice. So when you are doing a tax audit, when you are assessee bring his books for tax audit, and you see that how to reduce the 5% clause, you decided to get the accounts audited, but this is not correct. You have to be very careful while deciding on this clause, because this clause is mandatory. This proviso is mandatory for everybody. So if your turnover is from 1 to 10 crore and receipts in cash and expenditure, this payment for expenditure in cash is not more than 5%, then you do not have to get the accounts audited under section 44A. Sometimes what happens is that assessee comes and said that I have to take the loan from bank, and bank people are saying that you just get your accounts audited. But in that case also, if the proviso does not allow you to get the accounts audited, then you should not audit the accounts in that case also. Please be careful, because bank people are saying that saying the assessee that you just get your accounts audited and we will grant the loan. But if the department, if you issued a tax audit report and the department gets to know about that the assessee is not required to get his accounts audited, then what will happen? Then you can be held liable for misrepresentation offense, because you save the time period from July to October for filing the return of income. Then you save the tax, you save the interest, and you also save the fees for late filing of return. So please be careful. If the provisions does not get required to get the accounts audited, then please don't audit the accounts. You can issue any other report as suggested by the ICAI in the other guidance notes. You can issue other reports, but don't issue the tax audit report. Then one more thing is that second proviso is also there. What the second proviso says, that if the payment or receipt is not by the account pay check, then it is deemed as cash payment or cash receipt. Now, what we are doing is that we are giving observation or qualification in the tax audit report that we are not having any system to verify whether the payments or receipts were made in cash, through checks were made by account pay checks or not. So when we are giving that qualification or that observation in the tax audit report, so this qualification will also apply here also. If you are not having any system to check whether the checks issued were account pay checks or not, how you can deduce 5% as payment made for expenditure more than 5% in cash or account pay checks. So please be careful. If you have given that qualification there, then please maintain this qualification here also for reducing the tax audit. Then clause B is carrying on profession if gross receipt is more than 50 lakhs. So if gross receipt is more than 50 lakhs, then the tax audit is mandatory in case of professionals. Then clause C, 44AE, 44BB, and 44BBB. In that case, if assessee claimed income lower than prescribed, as in that sections, respective sections, then the tax audit is mandatory. Then the fourth one is carrying on profession if deemed under section 44ADA. So if a person is carrying a profession under section 44 and claims income to be deemed under section 44ADA, then he has to get his accounts audited. And second condition is if he claims such income to be lower than profit so deemed and his income exceeds maximum amount which is not chargeable to income tax. So these two conditions must have to be fulfilled. First one is that he claimed such income to be lower than that profit so deemed under section 44ADA, and second is his income exceeds maximum amounts which is not chargeable to Income Tax Act. Then fifth one is carrying on business if section 4484 is applies and his income exceeds maximum amount which is chargeable to income tax. So in those 5 cases, tax audit is required. Now, what proviso is saying is that first proviso is that no tax audit if profit is declared under section 44AD subsection 1 and turnover does not exceed 2 crores. So what finally is deduced is that if your turnover is less than 1 crore and you are not covered by exception made under section 44AD subsection 4, then tax audit is not required. Second is your turnover is between 1 to 10 crores and your turnover is 1 to 2 crores, 44AD or 44AB. So if your turnover is between 1 to 2 crores and you are showing income as under section 44AD subsection 1, then no tax audit is required. Then if your turnover is between 1 to 10 crores and you are showing your cash receipts and cash payment for expenditure is less than 5%, no tax audit is required. And if your turnover is more than 10 crores, then the tax audit is compulsorily required. So this is the basic thing for tax audit applicability. Now the turnover issue is there. Turnover issue is also there. In my view, turnover is having the same controversy as in section 145A, because in my view, department is giving you the mandate to doing the tax audit under section 44AD. So if the department is giving a mandate, then the tax audit is to be done as per the inclusive method, as per section 145A. By applying section 145A, if your turnover inclusive of taxes is more than the prescribed limit, then the tax audit is required to be made. It is my view. Then, as Dr. Girish Aujari was also saying that the fee is also very, very less in tax audits. What I feel is that it is less reward and more risk. But our fraternity, chartered accountants are fully capable, and I believe that we can do the work very cautiously, very carefully while doing the tax audit. Now, one more proviso is there in 44AB is that if a person is required to get his accounts audited under any other law, then only 3CD is sufficient. He is not required to get his accounts audited under section 44AB. Now, in this case, one example is there, which I want to discuss, that a company is there, a private limited company was there, and the turnover of the private limited company during the year was more than 10 crores. It was required to get the accounts audited, but suddenly in February, the company decided to convert into an LLP. Now, when it decided to convert it into LLP, the turnover of the LLP was less than the prescribed limit. Now, what happens is that while doing the tax audit of the private limited company, the Companies Act does not require the company to get its accounts audited because the company was dissolved. The company was converted into the LLP. The entity of the identity of the company was finished as soon as it was converted into an LLP, and the Companies Act does not require it to get its accounts audited. Now, when the Companies Act does not require the accounts of the company to be audited, then the tax audit of that company till the date when it converted into an LLP is to be under section 44AB only. and the report is to be given in form number 3CB and not in form 3CA. Then (44AD). Before discussing the 44AD subsection 4, which requires the accounts to get audited, I would like to throw some picture on the definition of accountant as given in section 288 subsection 2. Section 288 subsection 2 prescribes the definition of accountant, and this definition was given in explanation to section 288 subsection 2. As per this definition, the accountant means any chartered accountant, and that chartered accountant must be as per the provisions of section 288 subsection 2. That is, in case of assessee being a company, the person who is not eligible for appointment as an auditor of the said company in accordance with the provisions of section 141 subsection 3, and in any other case, the assessee himself, or in the case of assessee being a firm or association of persons or HUF, any partner of the firm or member or association of the family. Then in case of assessee being a trust or institution, any person referred to in clauses A, B, C and CC of section 3 of section 13. In case of any person other than persons referred to in subclauses 1 and 2, the person who is competent to verify the return under section 139 in accordance with the provisions of section 140. Then any relative of any of the person referred to in subclauses 1, 2 and 3, an officer or employee of the assessee, an individual who is a partner or who is in employment of an officer or employee of a company, an individual who or his relative or partner is holding any security or interest in the assessee, is indebted to the assessee, and a person who, whether directly or indirectly, has business relationships with the assessee of such nature as may be prescribed. So please be careful while doing the tax audit, and if you are not covered, if you are covered with any of the exceptions, then only do the tax audit. If you are not covered, then you please don't accept the tax audit. Then specified date, as we all know, is 1 month prior to section 139 subsection 1. Then 44AD subsection 4. 44AD subsection 4 is that eligible assessee, where I would like to read subsection 4 of 44AD, because this section says that where an eligible assessee declares profit for any previous year in accordance with the provisions of this section, and he declares profit for any of the 5 assessment years relevant to the previous year succeeding such previous year, not in accordance with the provisions of subsection 1, he shall not be eligible to claim the benefit of the provision of this section for 5 assessment years subsequent to the assessment year relevant to the previous year in which the profit has not been declared in accordance with the provisions of subsection 1. Now, what does this mean? That when an eligible assessee declares, इसको अगर हम हिंदी में ऐसे समझें कि अगर आपने 44AD में प्रॉफिट डिक्लेयर किया किसी भी साल में, और उस साल के बाद 5 सालों में से आपने किसी भी एक साल में 44AD में प्रॉफिट डिक्लेयर नहीं किया, then you will be out from that 44AD, and for the next 5 consecutive assessment years you will have to get your accounts audited without any fail. So if you are opted out from the scheme of 44AD, then for the next 5 years you will have to compulsorily get your accounts audited under section 44AD subsection 4. This is the scheme of 44AD subsection 4. It also means that if my turnover is less than 1 crore and I am not covered by section 44AD subsection 4, then no tax audit is required. Then 44AD subsection 1, which says that if I had declared my turnover 6% or 8%, then you will not be required to get your accounts audited. Then if you are covered under section 144AB clause E, 44AB clause E says that if you are, what 44AB clause E says is that carrying on business shall, if the provisions of subsection 4 of section 44AD are applicable in his case and his income exceeds the maximum amount which is not chargeable to income tax in any previous year, then the accounts must have to be get audited. In that case, what happens is that if you are covered under section 44AB clause E, then you cannot get the benefit of 44AB subclause A. That is, you cannot claim the exemption of 5% of cash receipts and cash payments. You must have to get your accounts audited under clause E if you are covered in that clause. Then there are some more common problems while doing the tax audits. It is that ICDS quantification we generally mentioned as nil. So please be careful while giving the ICDS qualifications. If the ICDS qualifications are there and you are maintaining the draft ICDS tax computation, then you please give your quantification also in that case. This is the common problem. Then address is as per the PAN database. That address must have to be changed while giving the reports. That address has to be corrected as per the correct address of the assessee, and because as per that address only the various surveys are there. So please be cautious while giving the address. Then ratios, while giving ratios, we always forget to give the fourth ratio, that is material consumed ratio. So please be careful while giving the ratio. Then yes, one more thing is that observations in form number 3CA and 3CB, we should give observations when we feel we have to give the observations. We must give the observations in great detail, and the observations must have to be very specific. We should not give general observations, as said by my co-speaker Abhay Chhajarji, that the observations must be very specific. It is to be quantified also, where it should be quantified, and the observations must be given without any fear. So the observations in form number 3CA is to be given in clause number 3, and in form number 3CB there are two clauses, that is clause number 3 and clause number 5. So the observations must have to be given very carefully and very cautiously while issuing the tax audit reports. So form number 3CA, as we all know, form number 3CA is for the companies, and that form number 3CA, we rely on the work done by other auditors. We rely on the work of the other auditor in case of form number 3CA, and form number 3CB is the report where we audit the accounts of the assessee. So in para 3 of form number 3CB are observations relating to financial statements of assessee. So wherever we found any observation or any comment, we want to issue any comment in respect to the financial statements of assessee, we should give that comments in para 3 of form number 3CB. And when we want to give our comments, observations in respect of the statement given in form number 3CD, we should give in para 5 of form number 3CD, para 5 of form number 3CB. Sorry. So this to be kept in mind while issuing the form number 3CA and 3CB. Then if there are any, madam, technical team is there. If there is any query, I can answer that query till now. If there is any query. Hello. Hello.
Hi, sir. No query till time.
Okay. Okay.
You can continue with your history. Okay, sir.
So disclaimers also, we must give the disclaimers while issuing the tax audit report is in respect of section 40A3, 269SS, 269T, 269ST. If we are of the opinion that the disclaimers to be given, because right now what most of the banks are doing is that they are issuing the account pay checks, account pay checkbooks. So if the account pay checkbook is there and we feel that there is a system of verification that the payments have been made through account pay checks and received through account pay checks, then that disclaimers must not be given. But if we are of the opinion that there is not a system to verify whether the payments have been made through account pay checks or the payments received were not through account pay checks, then we should give the disclaimers. And if the disclaimer is given, as I already said, that if that disclaimer is given, then we should carefully see clause A of 44AB while selecting the 5% of the cash receipts and 5% payment for cash payments. So this disclaimers must be carefully kept in mind while giving. Then fixed assets purchased in cash. So when a assessee purchased a fixed asset in cash, as we all know that depreciation is not allowed on that fixed assets. So please be careful while giving the report in clause number 18 that the depreciation will not be allowed on fixed asset purchased in cash. Then I am also been told to discuss section 44AA of the Act. 44AA of the Act is that we have to maintain the books of accounts. 44AA says that maintenance of books of accounts by certain persons carrying on profession or business. Now, every person carrying on legal, medical, engineering or architectural profession, or in the profession of accountancy or technical consultancy or interior decoration or any other profession as is notified by the board shall keep and maintain such books of accounts and other documents as may enable the assessing officer to compute his total income in accordance with the provisions of this Act. So as we all know that while doing the tax audit, we have to verify the books of accounts also. So in case of these professions, that is legal, medical, engineering or architectural profession or accountancy, interior decorator, we have to verify the books of accounts as maintained by the assessee as per section 44A AA subsection 1. And as per subsection 2, every person carrying on business or profession not being a profession referred to in subsection 1 shall, if his income from business or profession exceeds 1,20,000 rupees or his total sales turnover or gross receipts, as the case may be, in the business exceeds 10 lakh rupees in any of the 3 years immediately preceding the previous year, or where the business or profession is newly set up in any previous year, then also the income from business or profession likely to exceed 1,20,000 rupees or his total sales is likely to exceed 10 lakh rupees during such previous year should maintain books of accounts, and that books of accounts must have to be verified while giving the tax audit report. So 44 AA says that we have to maintain the books of accounts as per law. Now, I will also like to discuss the problems faced by members in various clauses. So these clauses is that in clause number 1, name change. If there is a change in the name, then both the names should be mentioned. Then in clause number 2, address, as I said, that take KYC and change in address as per MCA or annual report of the assessee company to be mentioned, and that address must have to be kept in your documentation file. Then clause number 3 is KYC. Clause number 4 is we have to mention the registration numbers of indirect taxes. So casual registration also to be mentioned here. Exhibition, for just in case of exhibition also the casual registration is taken. If the casual registration is also taken, then we have to mention that number also. As per guidance note, if required to be taken but not taken, same to be mentioned. So as per guidance note, if a registration is required to be taken but not taken, then we have to report that. And we also have to check the current liabilities. Now we should check the current liabilities of the assessee. Now if there is a current liability in the column of current liability, there are some liabilities of indirect taxes. So we immediately mention the registration number of that current liabilities. Suppose in the current liability section there is mention as bazaar tax. In some cases bazaar tax is there or a cess is there. So we should mention the registration number of that also. Old number like VAT, service tax, we should not mention because these acts have been abolished. Now status, 5th one is status, then 6 to 7 is date of commencement. Then in clause number 8, we have to mention proper clause out of 9 clauses given. We have to be very careful in choosing the right clause given while doing the tax audit. Then 8A, please take the draft computation of income from assessee, and if as per that draft computation, just choose whether the assessee has taken the benefit of new scheme or old scheme. So please mention that also while as per the draft computation of income. Clause number 9, check partnership deed. In that partnership deed, in case of change, give both. Dissolution, in case of dissolution, no information is required. So please check carefully in case of partnership confirms the new partnership deed or change in partnership during the year. Then clause 10, select proper clause, tally with ITR, and nature of business must be tallied with the nature of business given in the ITR. If change, there is the details to be given, whether there is addition or discontinuance. Then in clause number 11, whether books of accounts prescribed as per section 44AA. So if the books of accounts are prescribed as per section 44AA, then only write is yes here. Stock register. In some cases, assessee does not prepare the stock register. If the stock register is not prepared, please don't hesitate to give your observation in case of stock register not maintained by the assessee. And that stock register not maintained qualification must have to be given in column 5 of form number 3CB. Also give location of each address where books of accounts were maintained. Check whether informed to the GST department, MCA. If the books were maintained outside India, give that address also in clause number 11. Then examined, books of accounts examined. In case of books of account examined, you must mention the other documents which were examined by you, that is partnership deed in case of partnership concern, then TDS, GST, ESIPF returns you have verified. You must have to give the details of those returns. Cost audit report, if there is any cost audit done during the year, that cost audit report is also the other document you have examined. You must have to mention that document. Then in case of branch audit, just mention whether in case of branch audit, just mention the qualification or the observation that you are doing the audit only for the branch. Then method of accounting, whether cash or mercantile, it has to be mentioned, because if you are preparing the tax audit report from software, the space is showing as blank. So please fill that space properly. And if there is any change in the method of accounting which is affecting the P&L, so please quantify. And ICDS also to tally with the ITR. If in the ITR you have given the effect of ICDS, so please just cross verify with the ITR the effects given in the tax audit report also for that ICDS qualification. Then clause number 14 is closing stock. Closing stock is mentioned wrong in the utility. It is mentioned as at lower of cost or market value, but it should be at lower of cost or net realizable value. So there is a deviation as per section 145A. That deviation must have to be mentioned as yes, because in case of that deviation must be there, because we are preparing the accounts on exclusive method, and the department is saying as per section 145A the accounts have to be maintained on inclusive method. So there is a deviation. So please mention that deviation as yes and give your proper comments there. Please, just a moment, please. Then ESIPF, as we all know, the ESIPF controversy is over now. If the assessee has not paid the ESI and PF within the due dates prescribed under the said acts, the same has to be disallowed. This controversy is finished now. So please mention whether the ESI and PF were paid within the due dates prescribed under that acts, and that is to be given. And capital receipts, refunds, if 145A section is not followed, if you are not following the method of accounting as per section 145A, then observation must have to be given here also in case of refunds. Then now a new clause, new section 194R is also there. So 194R is also there, and we all know that the incomes received by assessee in cash or in kind must have to be treated as gross receipts. So if a company is giving a Singapore visit to a dealer, then this Singapore visit must have to be treated as his income. So this must have to be included in the gross receipts. It is to be kept in mind. Then clause number 17, only for business transaction it is only for business transaction. Just a moment. I just wrote the guidance. Yes. The clause number 17 is only for business transactions, and audit of properties only for entry in books of accounts. So this is to be done for properties entered in books of accounts only. Clause number 17, if consideration is more than assessed value, not to report. Foreign properties also covered. In case of power of attorney transactions, collect valuation certificate from the respective expert, and cross verify from annual information statement and form number 26AS also. Separate details for all properties to be reported. Clause number 18 is in respect of depreciation. So in respect of depreciation, the care must be taken of I think there is some, yes. So in case of asset purchased in cash, the depreciation cannot be claimed as per the law. So please be careful while allowing the depreciation, and depreciation given in the ITR must be tallied with the depreciation given in this clause. So please cross verify the depreciation and give carefully. In clause number 20, ESI and PF, as I said, that dispute is now over. So even if now in some cases, even if salary is not paid, suppose the assessee has not paid the salary, but ESI PF must have to be paid. That has to be reported.
Sachin sir, there is one information to the participant that question and answer pop-up will not be enabled that time. But
Okay.
now we requested to all the participants that question and answer box is enabled, and
Yes.
they can ask the question in the box or post their comments so that we can refer to this question to the Sachin sir. So we have kindly requested to all the participants, please, if you have any question, you can post this message on the pop-up, appear on the Telegram or send some big. So Sachin sir, please continue.
Yes.
Okay, sir.
There is no question till now.
Not at all at that time, sir. But as soon as a question will appear, we will inform you.
Okay.
Okay.
Now, I had discussed applicability of tax audit turnover estimate scheme to data. Maximum number of audits. Just give me a break for 2 minutes, please. Okay, I'll just.
So we request to all the participants that Sachin sir taking a 2-minute break. You can also refresh with the taking a break for 2 minutes. We will continue after 2 minutes. So thank participant and thank to all the members. Please give me a 2 minute for a short break and we will continue. We requested to all the members that in that break you can post your queries on the website, please.
मैडम यहाँ participants तो कोई है ही नहीं, बोले जा रहे हैं कोई है ही नहीं सुनने वाला तो।
participants तो सर उसमें रहेंगे ना सर, 1600 लोगों ने ज्वाइन किया हुआ है ना।
अच्छा 1600 ने ज्वाइन किया हुआ है, मेरे को तो यहाँ 4 ही दिख रहे हैं। Yes. So I received some questions and I would like to discuss some questions also which has been received by me. That first one is that compliance of SA 700 or SA 600 related to tax audit report under section 44AB of the Income Tax Act 1961. So SA 700 says that the tax audit report should have the paragraphs relating to assessee's responsibility and tax auditor's responsibility as required by the guidance note in para 11.9 in respect of SA 700. While reviewing many of the tax audit reports, do not have the paragraphs relating to assessee's responsibility and tax auditor responsibility as required by the guidance note in respect of SA 700. And some tax audit report contains a reference about the attached physically signed tax audit reports which mention these paragraphs, thereby complying with the requirement of SA 700. So as I said that SA 600 and SA 700 reporting must have to be attached with the tax audit report. However, the same were specifically required to be mentioned, reported under clause 3 of form 3CA or clause 5 of form 3CB as the case may be. So we have to mention in clause number 5 of 3CB or clause number 3 of 3CA that we are enclosing our tax SA 700 reporting separately. Then one more question is, describe some observations relating to form number 3CA, 3CB, audit report under section 44AB of the Income Tax Act 1961. So in some cases, the date of audit report reported hereunder at clause number 1 of form number 3CA is the date of filing of tax audit report. However, this should be the date of signing the statutory audit report. So please be careful while giving the date in form number 3CA that the date must be of the date of statutory audit and not the tax audit. And in many other cases, wherever the reporting under clause 21D and 31 series has been done on the basis of certificate of assessee. As I said that we should not rely on the certificate given by the assessee. We are giving the report as true and correct. So the same has not been reported as an observation in clause 3 of form number 3CA and clause 5 of form number 3CB as the case may be. Then a reconciliation for non-deduction or short deduction of TDS or TCS which requires reporting under clause 34 and clause 21B may be provided as an attachment and maintained in the working paper file of the auditor. There may be differences due to different threshold limits, and observation regarding short deduction, if any, can be given under clause 3 or clause 5 of the form number 3CA or 3CB as the case may be. It has also been observed in some cases that in certain tax audit reports that were examined, the qualification paragraph, that is clause 3 of form number 3CA and clause number 5 of form number 3CB as the case may be, contains a reference to notes to form number 3CD. These notes do not mainly contain the qualifications but also contain general additional information. So this should not be given. It is suggested that as per the guidance note, only qualifications or observations should be given in space provided in form number 3CA, 3CB itself, while the additional information which are not in the nature of qualification could be attached as notes. So then reporting requirements in clause number 2 related to address of the assessee. As I had discussed that the proper address must have to be given. It is observed that in certain tax audit reports, address mentioned in form number 3CA, 3CB as the case may be is different from the one mentioned in annual report or as registered under MCA. So that address must be same as given in the MCA records. As per the guidance note also issued by the ICAI, the tax audit report should contain the address as has been communicated by the assessee to the income tax department for assessment purposes as on date of signing of the audit report. Then compliances in relation to reporting of indirect taxes. As I had discussed that the compliances in respect of the indirect taxes. The clause requires reporting of registrations under indirect tax laws, and in certain tax audit reports, registration under all the other indirect tax laws which have been mentioned in CARO have not been reported under this clause. So please be careful while giving the reporting in this clause, that this should be as per the details given in CARO. Then requirements related to indicating the relevant clause. That relevant clause must have to be selected very carefully. It has been observed by the board in many cases that the tax audit reports of companies which are required to get their accounts audited under Companies Act 2013 select option A. Select option A. That is total sales, turnover or gross receipts of business exceeding specified limits, instead of option third proviso to section 44AB, audited under any other law. Because in case of a company, the accounts are audited under any other law. So that clause must have to be selected while giving the reporting in this clause. So please be careful while selecting the clause, and proper clause must have to be selected. And nature of business. Nature of business report, clause 10. It has been that code for business or profession for all main activities to be selected, where it consists of more than 10% of the total turnover of the company. And in some cases, the board has found that number of cases that more than 10% of the business activities, only one business is selected, or not all the businesses which are having turnover of more than 10% is selected. So please select all the relevant codes properly while giving the reporting. Then books of accounts prescribed or maintained and examined under section 44A AA, as I had discussed, that no books of accounts are prescribed for a company. So please mention proper reporting while giving the clause number 11. Also, as per Companies Act 2013, does not specifically prescribe those books of accounts for a company. Thus, in respect of a corporate taxpayer, the tax audit report should report no. It should not report yes. Under this subclause, however, reporting of yes has been noticed in some audit reports by the TAQRB. And clause number 11B, it has been observed that the location of maintenance of books of accounts has not been specified in some tax audit reports. Also, the fact that the books of accounts are maintained in computer system is not mentioned. As I said, that all the books, all the places where the books have been maintained by the assessee company or as the assessee must have to be mentioned in that clause. So please be careful while giving the report in this clause. Clause 11C, as I had already told, that in some cases you are verified various reports, but the same has not been mentioned. It is, as per the guidance note, reference to all such supporting evidences or relevant documents is also required to be made under this clause. Then ICDS. In case of ICDS, the details required under this subclause are not fully disclosed. The ICDS tax or computation is not fully prepared by the auditors. It is mentioned as 0 or nil. But if the quantification is there as per the ITR or as per the assessee, the same has to be mentioned. And clause number 13F, the disclosure made in the financial statement is given under these subclauses, particularly in case of ICDS 1. It may be deemed to be comply with the disclosure requirement under this clause. However, it is to be ensured that the audited financial statements are duly uploaded in the portal. However, if there is any specific change in accounting policy or any deviation from the requirement under ICDS, then the same should be required to be disclosed under the relevant subclause. Then method of valuation of closing stock. Clause 14, that the method of closing stock, method of valuation has not been mentioned separately for each item of stock. We have to mention method of valuation for each item of stock, that is for raw material, finished goods, work in progress, and reference was to be given properly. If the annexure is attached, then the reference must be given in respect of that annexure. And clause number 14b, inclusive method for valuation of inventory is prescribed under the taxation laws, and thus effects of inclusion of duties and taxes are to be properly reported under this clause. It was observed that deviations from 145A remained to be reported while following exclusive method in certain cases. Then as per the guidance note, the adjustment is required to be made for each item of inventories, that is finished goods, work in progress, raw materials, etc. However, in certain cases, this was not done for each item of inventory. We have to prepare the adjustment as per section 145A. I think one question is there. Sir, if assessee had turnover of 60 lakhs, but he has not obtained the GST number, what is solution if assessee wants to file ITR under 4480? If assessee had turnover of 60 lakhs, but he has not obtained the GST number. See, assessee is having a turnover of 60 lakhs. As per the GST Act, he has to mandatorily take the GST number, but he has not taken the GST number. But if assessee wants to file ITR under 4480, yes, he can file the ITR under section 4480, because as per 4480, if the assessee is having a turnover of less than 2 crores and he wants to declare the profit as per the scheme, that is 6% in case of receipts from check, digital receipts or account pay receipts, or 8% in case of cash, then he can declare the income under section 4480. There is no problem. He can declare he can file the ITR under section 4480. If he has not taken the GST as per the GST requirement, it is the fault in case of GST Act only. He can file the ITR under section 4480. Then I was discussing method of closing stock. Yes, as per the guidance note, we have to give the adjustments in case of each item of inventory. Then reporting of any land or building or both is transferred during the previous year for a consideration less than value adopted or assessed or assessable by any authority of a state government referred to in section 43CA or 50C. So in this case, reporting under this clause is required where any land or building or both is transferred during the previous year for a consideration less than value adopted or assessed or assessable by any authority of a state government referred to in section 43CA or 50C. So in this case, reporting was done in some cases when consideration received or transfer of land or building were same, which was not required. So in this case, when the consideration received is same as per the circle rate, then the reporting is not required. Then in case of depreciation, clause number 18, details of addition or deletions given in the tax audit reports. Mostly when the details are in huge number, some chartered accountants gave the date as 30 September or 31st March. But we have to be very specific and give the detail of each and every item date wise. And there is a provision, there is an option given in the tax audit schema to import the details from Excel file also. So we should give separate details for each and every item of fixed asset purchased or sold during the year. We should not club the items month-wise or half-yearly basis. So, and these details must have to be tallied with the details given in the annual accounts of the company or the assessee. The details of addition or deletion must be tallied with the details given in the financial statements. So, while reporting additions to the block of asset, date of purchase and date of put to use, and for deductions, date of sale as reported are same in all the cases. But we should keep in mind that the dates must be properly mentioned. There may be a difference in the date between the date of asset purchased and date of asset put to use. If there is a difference in the dates, then the dates must be properly mentioned. Then one more question is there. In clause 4, we have to report registration number of indirect taxes. My question is that whether we have to report service tax registration number if the case is pending before the service tax authority. Sir, in my view, the service tax number is not to be given because the Service Tax Act is abolished. We have to give the detail of indirect taxes, the indirect tax numbers. So if the demand is payable or the case is pending, the demand must be there. So we have to give the reporting separate clause. That is, I think clause number 41 is there. So in that clause you have to report. But in clause number 4, we don't have to give the detail of service tax number. In that clause number 4, we have to give the detail of only indirect taxes which are in force as on the date of giving the tax audit report or 31st March of the year. Yes, we are on depreciation clause. Then amount of adjustment in case of foreign exchange fluctuation due to change in the rate of exchange, for which a separate column is provided under addition, and we generally forget to fill that column. So in case of any change in the rate of fluctuation, foreign exchange fluctuation, and any adjustment is there, we must give the detail in the relevant clause and relevant column in the clause 18. Clause number 19 of tax audit report is that reporting for amount admissible under section 32 AC, 33 AB, 33 ABA, 35(1)(3). So in that case, the amount debited to the P&L account has been shown in the tax audit report as uploaded on the income tax department, while the same has not been reported in the physically signed tax audit report. So please be careful while issuing the tax audit report in this case. Then observations in relation to detail of contribution received from employees for various funds. In this case, the due date of payments and the actual date of payments should have been verified by the tax auditor. It is to be keep in mind that since the due dates have been mentioned incorrectly in some cases, then during the e-processing of the return, the addition is there under section 143(1). So please be careful while giving the dates very carefully. And the tax audit, as I said, that the tax audit report, when you prepare the tax audit report, please take a final printout and verify the details given mentioned in the tax audit report to remove any fault. Then clause number 21. Clause number 21 is penalty charged under various act is to be shown separately for each act. When there is a penalty in penalty charged under various act as per the financial statements, then please mention penalty of each act separately. And one more question I had received. In clause 10, we have to report nature of business or profession. In clause 10, my question is that if the assessee is engaged in service sector as well as in different types of trading business, then what we have to report principal line of business, whether to report all or any specific. Now, in clause 10, nature of business is to be mentioned. Now, nature of business is that if the assessee is engaged in both service sector and trading sector, then we have to mention both the sectors. We have to give code for both the sectors separately. It is not a choice. It has to be given both the sectors separately. Then contribution received from employees, the controversy is over. As I have said, that controversy has been over, and we have to mention the correct date of deposit and correct date of due date. And if there is any late deposit, then we should mention that in column number 220B. Then in clause 21B, where we have to report the non-deduction of TDS, the reporting, in some cases, the date is mentioned as 11/11 because the date is not known. So the date is mentioned as 11/11/11/11, but we have to mention the correct date. One more question I had received is that, sir, if the turnover is less than 1 crore and the assessee has maintained proper books of accounts, if the turnover is less than 1 crore and the assessee has maintained proper books of accounts, but his profit is at about 4%, whether the assessee is required to get tax audit if he did not opt the 4480. See, if the turnover is less than 1 crore, if the turnover is less than 1 crore and the assessee is not covered under section 4480 subsection 4, if the assessee is if the assessee is covered under section 4480 subsection 4, then he has to compulsorily get his accounts audited for the 5 years. Then there is no option. But if the turnover is less than 1 crore and he is out of section 44 AD subsection 4, then he should not get his accounts audited under section 44 AB. Your question, I think, is answered. So if the turnover is less than 1 crore and SSC has maintained proper books of accounts and his profit is about 4%, then he is not required to get his accounts audited as per section 44 AB. Then the next question is, a sole trader, retail trader not maintaining item-wise stock register in proper format, how it can be mentioned in the tax audit report? Sir, as a chartered accountant, we should give the observations properly. As I said, that we should not be afraid of giving any observation, because as of now, we are seeing that the chartered accountants are having great problem. So please mention that the assessee has not maintained the stock register. I could not give you any specific format of giving the observation, but as per my observation, you can give that as the assessee is engaged in the trading of numerous items, it is not possible for him to maintain the stock register, and the stock register is not verified by us, because you have to verify the stock register also. So please mention properly, and in the software the comment is already feeded, but if you don't want to give that comment, you can give your own comment also. Then the next question is whether what amount is to be reported for GST refund under clause 16B of tax audit report, amount admitted as due by the authorities or amount received. Sir, as per clause 16B, we have to mention the amount admitted as due by the authorities. We are not supposed to give the amount received. We have to give the amount admitted as due. The next question is, if a party is having turnover above 1 crore but below 2 crores, will audit be conducted under section 44AB A or E? As per section 44AB A specifies turnover limit of rupees 1 crore. However, section 44AB E for voluntarily not opting 44 AD, where limit of section 44 AD is rupees 2 crore. Now, for this, if a party is having turnover above rupees 1 crore but below 2 crores, will audit be conducted under section 44 ABA? So as I discussed that 44 ABA, if the turnover is more than 1 crore, the audit is required. Okay, but there is a proviso that if the receipts in cash or payment for expenditure in cash is more than 5%, then the audit is required. But if you are covered in the proviso that the turnover is less than 2 crores in section 44 AB, who declares profit and gains for the previous year in accordance with the provisions of subsection 1 of 44 AD, and his turnover does not exceed 2 crores. This is your question, no? Where limit of section 44 AD is 2 crores. So the audit is not required. If your turnover is less than 2 crores and you are declaring the profit under section 44 AD, then the audit is not required. But if your turnover is below 2 crore and the audit is required, then the audit is under clause A, not E. It is under clause A. The next question is whether deduction claimed under section 80C or 80D is to be reported under clause 33 of tax audit report. Now, in that case, in my opinion, that deductions is not to be reported, because these deductions are personal deductions of assessee. This is not to be deduced from the books of accounts maintained by the assessee. These are his personal deductions as per computation of income. These must not be reported. In the clause 33 of tax audit report, only deductions which are from the books of accounts audited must have to be reported. So These are the questions I had received. Now I would request Chitle sir to give vote of thanks or take the proceedings. Thank you so much, sir.
Yeah, thank you, Sachin Jain sir. Although I had to exit, I discussed with our team at TAQRB, and they said that your presentation has been very elaborate and you have also addressed the queries of the participants. I am sure that participants also may be happy with the resolution of their issues. However, still, if they have any more issues, maybe they can send email to the TAQRB so that maybe at the next edition, we will try to resolve. And here I must acknowledge that as far as CA Sachin Jain is concerned, he has very readily accepted. Yesterday night, we discussed with him his availability, and he has very graciously made himself available. And not only, but he thereafter has actually delivered the lecture. So I'm indeed very grateful on behalf of TAQRB to you, Jain sir.
Thank you, sir. Thank you.
This talks volumes of your command over tax audit, and I'm sure with your disposition, members also will gain much inputs and insight into this arena of tax audit. Friends, we were really grateful to CA Dr. Girish Ahuja ji, who inaugurated this particular series of discussion on tax audit arranged by TAQRB. And on each Friday, you will have date with us and understand various niceties of tax audit. We will be discussing about documentation, about auditing standards, about accounting standards as our attendant while complying with conduct of tax audit, because it is observed that particularly as Abhay Chajed earlier said, that SS 700 is not found in many 3CA, 3CBs. So that also has to be taken care of. There are various other accounting standards, particularly in case of non-corporate entities, that one has to consider. So all those aspects we want to highlight one by one, so that whatever tax audits that emerge after this particular series, we believe that it will really serve the purpose of tax audit. One aspect that we really want to highlight, and I was told that speaker has also highlighted, that while you are conducting tax audit, please try to understand that although the appointment is made by the client or the assessee, you are representative of the income tax department. Because unless your tax audit report is subservient to the process of assessment, the tax audit will carry no value. And if that happens in a mass scale, then in that case, maybe like GST audit, the department may also be whether whether we should continue with the tax audit or not. So let us try to focus on our core responsibility of stating anything. Supposing in case of TDS, if there is delay of 1 day, there is delay of 1 day. Because the client is esteemed, etc., and you feel that, okay, 1 day's delay, let us ignore. It is not within your authority. The assessing officer may take call of ignoring, not ignoring. But as far as chartered accountant is concerned, he has to report. So he cannot take any concessional attitude while reporting on facts. And please try to understand that in Form 3CA or Form 3CB, whatever particulars given in Form 3CD, you are not only certifying that they are true, but they are correct. And this particular aspect was adequately brought home by CA Jain during his lecture. So we are thankful to you. Thankful to CA Dr. Girish Ahuja for inaugural address. CA Abhay Chajed, the former vice chairman of TAQRB, for enlightening us with his experiences. CA Prasanna Kumar D, also for addressing the audience. And we also thank chairman of TAQRB, CA Dr. Raj Chawla, for initiating this particular series and ensuring that this runs. Today was the first lecture in this particular series, and I'm sure the other lectures also you will appreciate and you will get better insight. In the meanwhile, if on any point you want elucidation, you have issues, keep us sending them, so that while we consider subsequent presentations in this particular series, we will try to address them also. I also acknowledge the efforts by our team at TAQRB, headed by CA Anita Suneja and the other team members. They have also worked relentlessly, and I'm sure with the culmination you have seen that today we could accomplish the first lecture in this particular series. So friends, thank you for joining for this lecture, and all those who have addressed the lecture, I also thank them for their invaluable contribution. Thank you and good night.